evening. It's Quant Trade Edge, and today I've got a video on crude oil. I tried putting this video up last night, and I realized that I had all of my analysis, but I had the wrong chart showing, the wrong screen showing. So I got the comments, recognized that, and I want to basically redo the video I did yesterday. So on this crude oil chart, this all started with a 2B pattern that we called probably about 2-3 weeks ago when it was happening. I believe it was on this day right here, this day before it had made this day that we called it. And all the 2B pattern is this, move down, reflex bounce, and then a move to new lows. And we got at least one lower close, this one right here. And then we pop back into range, and you basically take the bar that broke the previous low, which is this red one, and since this made a lower low, we go to that low, and you would buy stop here when you break above that range. And your target is the high of this range. And, since crude oil looked really strong, I even had a little higher of a target based on a Fibonacci, which again proved to be too conservative, this $86 level. And, a couple of things here is, one, if you look at the risk reward on just taking the daily pattern without even overlaying the intraday, you can see, we're already at 79.91. I'm just trying to calculate it here on the fly. Minus 77.59 is $2.32. 91.23 minus 79.91 divided by 232. We're at 4.8 times your risk. If this was your risk in the trade, 4 times your risk would have been probably up here somewhere, a little bit over $90. Now, that's obviously one way you could trade it. You got the bottom, you got a good return on your risk, and it took you a good number of days. It took you 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, say 14 days to make 4 times your money. And, while, in isolation, that sounds like a great risk return. You make four times your money in 14 days. Sounds like a no-brainer. However, there are ways to even do it quicker, and that is using intraday signals, intraday risk. So this little arrow here denotes the 7th day in which the price closed above the 5-period SMA. And Linda Raschke made this very popular. She calls it an extended run, and she calls it persistency of trend. And when you have 7, you tend to be in an outlier move. The majority of moves are less than 7. So if you look here, 1, 2, 3, 4, 5 below, 1, 2 above, 1, 2, 3 below, and then this extended run started. So if you notice here, we had a consolidation, which is basically a hoagie, for 1, 2, 3, 4, 5 days. And if you take that down to a 30-minute chart, you'll see that consolidation here that we highlighted has a very distinct triangle pattern. It is basically a flat top triangle. Oops. Let's do that right there. And from here to here. And, basically here you had a little trap fail, didn't close above. And then here you had a little test above, push down. And it wasn't until the morning of the 12th that it started to break out in earnest. And, this is kind of a, perfect storm. And, the art of trading is recognizing how rare and how many things are lining up in your favor to then hit the gas and go big on a pattern like this. That's what sort of separates, I think, professionals with a lot of experience, because it does take judgment to do that. You could look at every 2B pattern, you could look at every extended run, just put equal risk on each pattern, or you see a triangle pattern, Maybe there was a triangle pattern somewhere here. Maybe there's a triangle pattern somewhere here that failed. Here, given the context that we're coming off a 2B trap, we're in an extended run, 5 days of consolidation, beautiful triangle right here. This is all aligning such that on this day, on the 12th, if we go down to a 5-minute chart, you'll notice something very specific. Here, I'll take this moving average off to clean it up. But basically, this was the top of the triangle, and we have a bald man pattern right there. Thrusting candle breaking through previous resistance, right? This resistance is very big. It's the top of the triangle. It's the top of this triangle, and there's something else really interesting here. Entering a bald man pattern, you would do so on a break of this high, 88.33, and your stop would be below this low here, 88.20, 13-cent stop. And let's drag this across. It's all the way to 88.20. So basically, in one day, with a 13-cent stop, you could have ridden it up to here, or even up to here. That would be, I guess, the next morning. But up to here, you're talking about a $1.07 move on 13 cents of risk. That's about 8 times your risk. And the beautiful thing is, you did it from 7 to noon. So think about making 8 times your risk in 5 hours. Versus what we looked at before, which was making 4 times your risk in 14 days. And then here's the sick part of this. It came down and gave you another opportunity. After making this rally up here, we tested back to that same zone of the bald man pattern. And let me blow up the bald man pattern again. It's just this thrusting bar. And I guarantee you this thrusting bar had volume relative to all the previous volume. After you've seen these a lot, you kind of know what they're going to show you, and you don't need the extra indicators. But range is highly correlated to volume. So, obviously this right part of the chart hasn't happened when this happened. So looking back here, the volume on this bar is 4 or 5 times the volume of any bar previous to it. So this was a very significant volume bar, followed by a resting bar, and look how little volume there was on this pullback. That sets up your perfect bald man pattern. That bald man pattern gave you 8R in 5 hours. And then if you were lucky enough to get the retest, and again, this retest is a little bit of a trap. We dipped below this previous low and rallied on from there, and we moved to a higher time frame to show you where it's gone. It's gone even higher from there. And one of the things you could do to target, so this is now a 30-minute chart, you could look at the size of this triangle. The size of this triangle is 85.02 to 88.07. That's $3.05. Add $3.05 to this level, and you've got 91.12. And that would be your target for this 30-minute pattern. 91.12, we hit a high of 91.23. So let's see, this peak here got to 91.15. So you would have gotten, this height of the triangle added to the top of the triangle when it broke out is your measured move of this triangle. So even if you stayed on a 30-minute time frame, let's take a look at this. I haven't looked at this before. On a 30-minute time frame, even if you used this bar right here, the breaking bar, that's a 46-cent bar. and that would have been another higher time frame way to get at least 4R on this pattern. So lots of different ways to play it. It is helpful if you stick to one market so you maintain the story over time. The story here was a clean 2B pattern, which I'll post the links to the previous video on the 2B pattern where we called it right as it was setting up. 2B pattern, hits target, turns into an extended run, has a consolidation framed by a beautiful 30-minute triangle right here, breaks out, gets its measured move, but even in doing so, it set up a very clear bald man pattern. Of course, that's just a name I give it. It's called a 3-bar, 4-bar play. I called it a bald man pattern because Jared Wesley is a very big promoter of this pattern, and it's actually where I first learned of it in that context. So I give him credit for it without using his name. But sick 8R in 5 hours. Sick retest to the perfect level, which would have given you another 8, 10, 12R, however many, depending on how you risked it to here. And that's just what you do, day in and day out, blocking and tackling, doing your homework, finding the patterns, being ready to act as soon as you see them. So anyway, ask me questions. Happy to share. Happy to look at any other point of views that you have on this chart. That's it.